Good evening, everyone. This is Rajendran here, and welcome everyone to a webinar on how Autoflow provides an trading edge. It's a beginner level tutorial, and in this tutorial, what we are going to learn here is particularly about the very basics of Autoflow. What is exactly Autoflow, and how Autoflow provides more detailed information compared to the price charts, and some of the simple trading strategies using Autoflow, and who should use Autoflow charts, and some of the basic Autoflow terminologies. Mostly what we are going to cover in today's session is what you can anticipate is some of the basic idea about Autoflow terminologies. This could help you if you are beginning with Autoflow for the very first time. I hope the audio and video quality is good enough to kickstart. If yes, just give me a quick confirmation so that we can quickly kickstart with the session without any further delay. Now, my name is Rajendran. I've been using Autoflow since 2012 onwards. And now I do aggressively use Autoflow on a daily basis. I primarily use Autoflow for two major purposes. One is for taking a very, very short-term view, and of course, an ultra short-term view. I do mostly takes using Autoflow. Another primary reason, I look into the volume information of the Autoflow to have a better approach about the markets. So, particularly, if you ask me what is Autoflow, I would say like Autoflow is more of a volume study. It's a study about buyers' behavior and sellers' behavior. And only in Autoflow, we can bifurcate the traders' behavior, which side the traders are coming in, whether buy side they're coming in or sell side they're coming in. In fact, Autoflow itself more of a visualization tool to visualize the market orders. So, right, there are when it comes to markets, obviously we're going to see buy market order and also sell market order. So it is one of the very important tool that every short-term trader and every intraday price action trader has to use it. Of course, it helps you to understand the price action better. If you watch only the price action alone, at times we may not have any clues. So price combined with volume, when you are applying that kind of price action style, I would say like the quality of trading decisions will only improve. So Autoflow brings more detailed information, not only about the price, but also about price action combined with volume. And the third dimension is what we call as a liquidity. Generally, not many traders, they focus on the liquidity. But if you are a professional trader out there, then definitely Autoflow gives you more detail about the liquidity, which is present in the particular market activity. So Autoflow focus more than what is happening right now. Majority of the tools, it looks into the past data and try to anticipate what will happen in the future. Whereas Autoflow, it focuses on the current information, what is happening, what kind of current trading behavior which is happening, where the momentum is happening right now in the markets, where the smart money players are positioning themselves, and where stop hunting is happening. So everything in context, it always talks about from a right now behavior. It also can be combined with market profile and price action studies. So I prefer combining market profile with Autoflow, which I've been doing that for quite some time now. Now I'm going to show you for the people who haven't watched Autoflow charts for the very first time. I'm going to show you the Autoflow charts here. I'm using NinjaTrader 8 over here. You see that Autoflow charts. What I'm using is a 5-minute candlestick charts. The one which you are seeing is the last Wednesday's information. That is the very recent day's information. Last 2 days markets are in holiday. So the recently available information is the last Wednesday's information. I'm going to show you the simulation of the Autoflow. So the numbers, what you are seeing, all these numbers are in lot size. So you know that Nifty lot size is 50. So obviously on the right hand side, what you are seeing is the buyer's volume. And on the left hand side, what you are having is the seller's volume. So this is more of a buyer's volume. Maybe I'll try to explain here. This side, all these volume information, what you're having is a buyer's volume. Buyer's volume. And likewise, on the left-hand side, whatever we are having is attributing towards the seller's volume. seller's volume. Probably in a traditional candlestick charts, if you would have seen, every candlestick will have only one volume information. That volume indicates both buyers and sellers only together, they form a volume data. But here, if you look into this block, the candlestick block, at each and every price level, at a separated distance, here I'm using a 2-point TPO. So every 2 points, the candlestick block will track you at each and every price level where the buyers and sellers are coming up. So maybe I'm going to simulate the price action over here. I'm going to simulate the price action at a market speed initially. So I'm going to simulate over here. So what you can see from here is like there are many places. This is the opening of the market. There are many places you can see big volumes are getting traded. So when I say big volumes, anything in Nifty above 450 lots for me will be considered as a bigger volume. So you can see here there is a big block of volume is getting traded over here. Big block, big chunk of volume is getting traded in this block. Very powerful, more crowded volume activity is getting traded over here. Kind of a volume cluster, we can say that. So that explains the importance of the price action over there. So this is a kind of a cluster. So very big cluster, more trading interest is happening over here. When more trading interest is happening, more traders are willing to do business. On buy side also, buyers also willing to show and sellers are also willing to show over here. Now, many people will be asking the question, my charts are not able to bifurcate buyers and sellers. How Autoflow can bifurcate the buyers and sellers activity? The answer is lying in the tick charts. So from the tick level charts, one can classify whether the trading activity is because of the buyers or because of the sellers. That is totally possible. All right. So there are very simple methodologies are the uptick, downtick method, bid and ask method, various methods are there. Using that method, the software tool itself will be bifurcating in real time whether the activity is done by the buyer or the seller. What Autoflow shows is the active orders. Active orders means the orders which are moving the markets. So you can see that the buyers initially at the opening, right, they are pushing the price up. The buyers are the price is going up because more market orders are coming in. Market buy orders are coming in more compared to the market sell orders. And not only that, because of that, momentum is also built at the opening itself. So opening, we've been seeing a lot of clustered volume activity happening. And you can notice that at the bottom in a sense, here is the bottom. You can able to see the total volume. This total volume here is nothing but total buyer volume plus seller volume is what we get a total volume. So the candle is about to complete, hardly another 40 seconds. The candle is about to complete. Now, what we can learn from the opening candle, for me, right, opening candle is always going to be an important one. So opening candle sets the tone for the rest of the day in many cases, particularly in Autoflow. And that too on a 5-minute chart. So for my expertise is mostly on the 5-minute time frame. I do use Autoflow tool on a 5-minute time frame on a regular basis. I've been only using 5-minute time frame only, both for Nifty and Bank Nifty. Primarily, I use mostly for getting the better view about the markets. At times, I combine market profile and Autoflow studies to take a combined decision. If you ask me, can I do standalone decisions using Autoflow alone? Yes, of course, one can do that. I personally had done at various points. I had done only using Autoflow alone. Definitely, one can trade. But you will get a better perspective about the markets once if you start combining market profile with Autoflow or Autoflow with any other volume-based studies like VPA or some other analysis. So first candle has been done. The second candle started. You can see that as the price is auctioning back and forth, as the prices are moving back and forth, you can see that the buyers and sellers are coming and collaborating against each other. Now, this is what we call as the price discovery process. The price discovery process happens at each and every candle level. It happens. Some places you're going to see highly crowded area. Some places you're going to see thinly crowded area. Some places you're going to see sudden volume coming in. Some places you're going to see sudden big commitments from the institutions is going to come in. Yes, you can also use Autoflow to understand commitments of the traders also. Sometimes big commitments happen from the smart institutions. Sometimes momentum traders, they give a commitment. So you can see that suddenly, all of a sudden, there was 1,029 lots is getting traded. That is definitely not a small volumes, to be frankly to speak. So big buyers are coming and trading over here. Now remember, for every buyer, there is an equal amount of seller. Let me pass here. So you may ask a question, 1,029, somebody bought, right? Somebody bought means they would have bought from the seller only, right? So 1,029 is a buyer. So one thing, if I take this 1,029 lots, I know that the 1,029 is going to be a buyer. And for every buyer, there is an equal amount of seller. So that means somebody would have sold 1,029 contract. 1,029 contract sold. One of them should be smart, right? So one of them might be going to have a better information. We never know whether buyer is going to smart or seller is going to smart. But one thing we know that the buyer who is the one who moved the markets. He places market order. Market order. So we can also call that as a active order. We can also call it as an active order or aggressive order. Active order. So what is the seller had done? Seller had done placing a limit order. So he had placed a limit order over here. That is what the seller had done. Limit order. All right, so that is more of a passive way. Sellers haven't moved the markets at all. Only buyers are moving the markets. So sellers are placing their positions. They supplied liquidity. So as I said, the order flow can be used to visualize liquidity. Liquidity flow. You can not only visualize liquidity, but also you can visualize the liquidity flow, where more liquidity is supplied, where less liquidity is getting supplied. What does that mean? So more detailed information you'll be able to understand. This is definitely a mandatory information for intraday traders. Intraday traders, many intraday traders in the markets are like, they are breakout traders. They don't look into much of interpretation about the markets. Or probably they want some simple tool, buy, where to sell. That is a kind of price action people love to trade. They want simple setups. Of course, Autoflow also provides simple setups only. But the thing is, the learning about Autoflow, I would say like it's a true understanding about the markets. If you're having an idea about what Autoflow is all about, definitely your understanding about the markets will get better. Your trade preparation gets better. And on top of that, your trade execution also gets better. All right, so let me do one thing. I'll go back to the slide. So this is how a traditional Autoflow charts looks like. So you also had seen a small understanding about how the buyers and sellers collide against each other. So what we can actually observe from the Autoflow. So we can understand big orders, where the big orders are coming in. So based on that, we can devise a pattern. It is not like a geometrical pattern or something like that. It is more of a volume patterns. So from the Autoflow, what we can understand is a repeatable volume patterns, which will help traders to take advantage of those information in a very, very short-term trading. When I say very, very short-term trading, I'm talking about intraday and scalping opportunities. So the best part about Autoflow is like a very tight risk management is possible. That is the number one key thing which attracts me to trade towards Autoflow. Of course, there are places you can identify where momentum buyers are coming in, where momentum sellers are coming in. You will have a pretty good idea about the volume flow, whether the volume flow for the day is big, medium, small. I would suggest that. I would say that back in the February month, right, when the Russian-Ukraine crisis started, extraordinary volumes and extraordinary liquidity flow has been observed. Now the emotion has been filtered out totally. Though the Russian-Ukraine war tension was still going on in the markets, now the sentiment is not that extreme. I would say like liquidity in the markets had came down, but our volume also came down drastically post that. But still, there's a decent amount of volume and liquidity flow is still, the market is getting maintained, both in Nifty and Bank Nifty. And I personally myself, I trade more of Nifty and Bank Nifty derivatives. Very few stock-based trades I do take, but most of them are hedged bets. So one another thing that we can understand here is where exactly momentum exhaustion can happen. By looking into the volume information, which is presented in the form of order flow, one can easily able to judge where the momentum is coming in, where the momentum exhaustion is happening, where the stop hunting is happening, or how a stop hunting could happen. Probably if you would have been visualized order stop hunting via order flow, definitely the way looking into the markets might differ. Of course, trapped buyers, trapped seller, volume clusters, volume commitments. So these are varieties of things that we can observe from the order flow. And how it's going to help us? It helps a trader to take very fast decisions. You know, right? Most of the decisions taken by the traders has to be very quick and very flexible to change also. If you're an intraday trader, maybe morning you have to take a long, again in the afternoon you have to take a short, maybe around the closing you have to take once again long, and then multiple flip one a trader has to keep on taking in the markets. And that's pretty difficult, because if you are a trader, taking one trading decision for a day alone, will it help? If you ask me, yes, it may help, but not every time. The best trade will not happen at the opening itself. Sometimes the best trade can happen during the middle of the day, sometimes around 2 o'clock. Sometimes it may not happen at all. There are many days a trader will not get the better trading opportunity, better entry opportunity. A trader is not going to get every time at the open, right? So what one can do here is, using the order flow, one can cut the trades into multiple pieces and they can trade with multiple views. So what I will be looking through Autoflow charts, particularly I'll be looking into various things: initiative drive, responsive auction. In fact, I'm going to give some brief idea about what is an initiative drive and responsive auction in this particular session. Other than that, Autoflow shows where the stacked momentum is forming, where the smart delta positioning is happening, where the delta unwinding is happening, or where particularly smart volume commitment. Smart volume commitment is kind of an institutional commitment where the market itself shows a bottoming out approach. So typically we have, and from the order flow, we look for such kind of smart volume commitment to understand whether the market has been bottomed out or not. And of course, momentum commitments. Sometimes market shows momentum commitments, trapped buyer, trapped seller setups, exhaustions. So there are various styles of exhaustion candles that you can see via order flow charts. And volume clusters. So I also give you some fair idea about the volume cluster which happened on last Wednesday. And the momentum reversals, momentum auction reversal, all these are patterns, volume-based patterns. And order flow sweeping, how an order flow sweeping will happen. When somebody is sweeping the order flow, means when I say sweeping the orders, single-handedly they are moving the markets. There are some big traders, they come and move the markets in a single-sided way. When such big traders are coming and dominating, how we can visualize through the order flow. And then how to spot a strong secure low or how to spot a weaker secure low. Importance of stronger secure low. Stronger secure low is one form of, again, one form of an intraday bottoming out approach, kind of. And low volume, low liquidity trend exhaustion. How a trend will exhaust when an up moving trend, how it will exhaust. Or a down trend, down moving trend, how it will do, how it will show some sort of exhaustion. And of course, commitment of traders. So these are the continuous things and order flow traders has to keep updated themselves. So we learned that there are two types of order. One is an active order and another one is a passive order. Active order moves the markets. They are market orders, very simple. Passive orders, we don't see through order flow, but they are the opposite parties of the order flow. For example, I'll take the same order flow tool itself. Here, I can see here, right? I'll try to explain with this. So let's take this particular block. So if you notice this block 443, we know that 443, we have active buyers. They are buyers, basically buy market orders, buy market order. So the opposite party is again 443 lots of sell limit order, sell limit order. Likewise, if I take this 149 at that particular point, at that particular price point, 149, that 149, it is on the sell side, so it belongs to sell market orders. Sell market orders. And not only that, the opposite party is 149 buy market orders. Buy market orders. I mean, not a buy market order, but it is more of a buy limit order. Buy limit order. So whoever sending a limit order is a passive order. Why it is called as a passive order? Because they don't move the markets, but they can control the velocity of the markets. We can call them like a liquidity suppliers. They are passive orders. Passive orders. Probably if you are sending a limit order, you are supplying liquidity to the markets. You're not going to move the markets, but the one who is placing in a very large quantity, they have the control to control the price action. They can literally create a resistance. They can literally create a support, instant resistance. They can go and create the markets. So Professor Verma is asking, first candle here shows 9 million till 9:05 a.m. So the first candle here for me, it shows 10,000 lots. Let me tell you, all these numbers are in lot size. Okay. So first two candles, what I can learn from here. First candle, what I can learn from here. There are a couple of things we're going to learn from here. Opening clusters, we are able to see opening clusters. So I'll draw a cluster zone over here. It's going to be a very important cluster. I can also combine these volumes. So if I go to the volume histogram, it shows me the total volume which has been cultivated around that level. Around that, you can see that a continuous cluster. You're going to be able to see from here. A lot of clusters over here, and there are mini clusters I'm able to see over here also. So two places I'm able to see the cluster. Two places I'm able to see the clusters. Why it is so important? Because clusters are important because that is where the positioning of the traders. Traders at times, they do position themselves around the clusters many times. Apart from that, right, I'll get back to the normal mode. I use the bid and ask imbalance mode. I'll also try to run the chart simulation over here. Okay, so the chart is getting simulated. Now, what I can see from here is that you can also see that the delta value, you can see the delta. The delta value talks about total buyers. So delta talks about what? Delta is a metric. Delta is a metric which talks about total buyers minus total sellers. Total sellers. So what does that actually means? It means we're going to sum up all the buyers. We're going to sum up all the buyers on the buy side. I'm going to add up all these values. And I want to add up all the sellers on the left-hand side. And then if I reduce I make a difference out of it, then I'll get the value of delta. So that delta value is what represented here at the top of my column, 2068. So what does that means is if the delta value is positive, imagine delta value can be either positive or it can be negative. So if the delta value is going to be positive, that means more aggressive buyers are in control, more aggressive. So buyers are in control compared to the sellers. In control. That means that there is aggressive participation from the buyers compared to the sellers. Whereas delta value can go negative also. Delta value, if it goes to negative, okay, we can see more aggressive sellers. Aggressive sellers means more market orders which are coming on the sell side. At any given point of time, we will be seeing a continuous flow of buy market orders also, sell market orders also into the system. They will keep on actively move the markets up and down. So buy market orders, what it will do? It makes the market to tick upside. Sell market orders will push the markets down. That is what is going to happen, right? So limit, if you're going to put limit order, you're not going to move the markets. Basically, it's going to sit in the limit order book only. Probably you would have seen the top 5 and top 5 bid and ask levels. If you would have seen the top 5 bid and ask levels, they are only limit orders. They are not going to move the markets, but they can control the markets. Passively, they can control the markets. They can create resistance. They can create support zone. However, at any given time, immediately at this instant, if market is ticking up, it is because of a buyer who is punching the buy market order. At this moment, if the markets are pushing down, that means sellers, they are pushing the markets down. So Vaibhav is asking, how do we know whether it's a market order or limit order from the order flow, as you explained? So as I said, whatever the number that you are seeing, they are only market orders only. Order flow shows only the market orders. But as I said, every buyer, if it is saying like 789 here, let me pass over here again. Let's take this with the very same example, the 1117. If this 1117 is a buyer, the buyer should have been bought from somebody else, or maybe one single people or multiple people he would have been bought. So on the opposite side, somebody had sold 1117 lots to the buyer. Somebody sold, right? Some seller, only a seller and buyer together, they can make a transaction. So this 1117 lots is a transaction which is made between the buyer and seller. So what order flow shows is that are they buyer or seller? Who initiated the transaction? So here this 1117 is more of a buyer initiated transaction. Price went up because of that. Price went up the moment buyer initiated the transaction. If it would have been a seller initiated transaction, probably it would have came on the sell side rather than a buy side. Right? So buyer initiated the transaction. Buyer got that 117 lots from the seller. Seller haven't moved the markets. Only buyer initiated the transaction. Seller only passively give it to him. Seller was waiting at that price and he's ready to give, but he haven't taken a decision. Seller haven't taken a decision here. Buyer is the one who taken the decision. So buyer is the one who is aggressive. Buyer is the one who moved the markets up. I'm sure that you'll be able to understand what I'm trying to explain here. All right. Let's move on to the next topic. I guess now you have a fair idea about what is active order. Active orders are the one moves the market. They are simply market orders. It can be a market order. It can be a stop loss market order also. Passive orders are only limit orders which are sitting in the limit order book. All right. All right. So what is that active orders are all about? Active orders are nothing but market orders, stop loss order. As I said, they move the price. Active order consumes liquidity from the order book. Active orders can be visualized only after execution. The moment only your order is getting executed as a market order, immediately that you can be able to see it on the order flow charts. I mean, you can also try run an order flow charts on some illiquid options. Try to send a market order. Of course, some brokers, they don't allow market orders. Only very few brokers are allowing market orders in options. Or the USDNR, you try it out. You try to move the markets. Probably you'll be able to see that your print would have been shown. So and so quantity has been bought. If you bought as a market order, you would have been able to see it on the buy side. If you try to sell, because of that, you punished a sell limit order, and because of that price went down, that too you can be able to visualize using the order flow. Very clearly, order flow captures those buyers and sellers information very clearly. So all the executed transactions will be available on the order flow charts. None of them will be hidden, right? So buy market order moves the market up and sell market order moves the market down. This is what active orders is all about. Whereas passive orders are simply limit orders. They are waiting for the market orders to fill. It is like, maybe to give an example, passive orders are like the passengers who are waiting for the Uber car to come and pick up. They are waiting there, but only if the Uber car is coming and picking them up, right? Then only they can move from point A to point B. That is how it is. Unless the Uber car is not going to happen, the passenger is not going to move. The same thing over here. Passive orders like limit orders, they'll be still waiting there at that price, waiting for the market order to come and pick them up. As long as the market orders are not reaching that point, the passive orders has to wait. Even if there is a lack of order is there, pending at that level, the order is likely to be at the pending level. Whatever you're going to see at the order book, most of the orders are pending orders. They're just waiting for some market orders to execution. They're waiting for the Uber cab driver, as simple as that. So passive orders, they supply liquidity. And all the orders are posted to the order book. Limit order controls the velocity of the price action. As I said, limit orders, they don't move the market. They only control the velocity of the price action. Passive orders mostly used by institutional traders, particularly for accumulating and distribution. And they also used by market makers also. Many retail traders, they prefer buying immediately and selling immediately. Those are the ones who want to buy immediately and sell immediately. They use market orders. I want to exit. I'm in profit. I want to exit. So I will take a market order. Suddenly there was a loss. Oh my God, there was a big loss. The price is opening with a big gap down. Suddenly my position is going into a loss. So what I'll do? I will get into panic and then I'll exit. So the traders, many traders in the industry, they predominantly use market orders. Very few players, they use the habit of keeping an limit orders. All right. So we're not here to discuss whether active order, sending an active order is intelligent or sending a passive order is intelligent or not. There are many places active orders are going to be intelligent. There are many places what passive orders are doing, and that is going to be intelligent. So particularly if institutions are going to use passive orders, majority of the time passive orders are going to be intelligent. So how I can understand if order flow is going to show only passive order, active orders, how I can understand the passive orders? As I said, passive orders are nothing but the opposite side of the active orders. If active orders are saying buying, then opposite side is going to be selling. Right? The opponent party is going to come and sell it to you. So I prefer using an structural way of placing an TPO. So for something like Nifty comes under the price range of between 10,000 to 20,000. So I use the price per tick as 40. This 40 is nothing but the 40 will be multiplied with the tick size. Tick size for Nifty is 0.05. So I'll be using a 2-point TPO. So it will be collecting in boxes of 2 boxes. Every boxes which you are seeing on my charts is a 2-point TPO. Means here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 blocks if I'm saying means this is a 26 points of price action. 13 into 2. 26 points of price action. If you could see here, if I right click and then I'll go to the indicators, I can go and simply go and key in the value as 40 over here, the 40 as the brick size. If I set the 40 as the brick size, obviously this 40 will be multiplied by the tick size. Tick size according to the NinjaTrader instrument settings. Every instrument settings, it has an internal tick size. Maybe if you are very new to NinjaTrader, I'm using NinjaTrader 7 over here. You can go to the tools, instrument manager. And from the instrument manager, you can type, let's say I'm going to use Nifty futures, Nifty future. So here I can go and edit and I can check what is that tick size. Tick size, mostly the data vendor is the one who set the tick size. If in case your tick size is not correct, one have to definitely, if you are using NinjaTrader, one have to set the tick size. So in my case, I've been using global data feed. So most of the vendors like global data feed and true data, they'll be by default using a tick size of 0.05. Some vendors, they don't set the tick size. In that case, it will be 0.01. If it is 0.01, then you have to multiply something like 200. So 200 into 0.01. So if your tick size is, assume that if your tick size is 0.01. If some data vendor, they don't set the tick size at all. If it is going to be 0.01, this has to be multiplied by 200 to get a 2-point brick. Right? So whereas in my case, what is the tick size? The tick size is 0.05. So I have to multiply by 40, which brings me 2-point brick. Every 2 point, it's going to collect the buyers and sellers activity at each and every 2-point interval in that candle. So this 40 is what I'm going to key in into my software settings. As simple as that. So maybe if you are looking into some instrument like crude oil, the tick size is 1, or if you're going to use USDNR, the minimum possible price variation, the tick size is 0.025. Sorry, 0.0025. All right, so it depends upon the price range and also depends upon the tick size on how to set the box size so that it looks optimal. We don't need too much of information also. I don't want too less of information also. For example, the same Autoflow chart. Let me go to the same Autoflow charts over here. If I am going to set a TPO size of, let's say, instead of 20, I mean, instead of 40 here, what if I'm going to set 10? What do you think what will happen? What do you think will happen? You can just type it out over here in the chat box. What do you think will happen if instead of 40, if I want to set the TPO size as 10, will I get more information, or do you think will I get less information? More information, right? Yes, Rajamani is right. And Professor Verma is also right. So the information is going to be more. When the information is more, it will be very difficult to process at our human brain level. So I prefer, like, I have to go and expand. I'll be getting too many numbers. It'll be very difficult to decode and very difficult to see the participator at each and every price level. So what if I'm going to use as 100? If I'm going to use 10, I know that there is information is getting too much. But what if I'm going to use 100? Now the information will reduce, or will it increase further? What do you think? It's going to be very less, right? So it's going to be 10 times lesser. So how much amount of information that you can consume? So this information, right, is very difficult to process also. Here, everywhere you're going to see the big lots. So I need to have a reasonable amount of information, which is not too high, which is not too low also. I want to set an optimal information. So that is what the table which I had given is presented over here, which is mostly designed for Indian markets. Maybe for different markets, the different TPO size is going to be there. So if you're trading that instrument routinely, you know which is the right TPO size for that. So I'm comfortable with, initially I was using 20, but once the market showed a huge volatility, I had to switch myself to 40. I've been using 40 for quite some time, more than, I think since COVID onwards, volatility in the market has been blasted. So since then I've been using 40. Earlier markets are calm, slow, steady, less volatile, very rarely erupts, right? So post-COVID onwards, the market structure itself totally changed. A lot of competition, more competition started entering into the markets. New style of traders, new variants of traders into the markets. On a daily basis, the volume participation is getting huge since then, right? So which has been reflected in the Autoflow. So since that more participation is happening, more participation means more volatility in the markets, more big fluctuations in the markets, and equally more tensions like Ukraine-Russia war tensions, COVID crisis, all those things we had seen in the past. And still the volatility in the market is keep on fluctuating bigger, and the volume participation also aggressively happening in the markets. So now from here, now I feel like this is an optimal information I can process. When the markets are running in real time, I can see this in volume information. I can interpret those volume information, which, as I said, I don't want too much of information. I don't want too less of information also. I want an optimal information so that I can able to decode the market activity during live hours. Let me tell you one thing. Autoflow is the only tool which is not a post-market study or a pre-market study. Pre-analysis, there could be very little information will be carry forwarding. Every day in Autoflow is a new day. We have to sit and interpret during the live markets, and then live decisions, all these intraday trading decisions or scalping decisions will be taken live. And that is why I love market profile, because if you're an intraday trader, right, you should learn to interpret the markets when the market is happening live. There's no point of discussing, hey, I should have done that, I should have done this. And that is why I like market profile, because market profile never look into the past data. It talks about what is happening right now, what is happening today. For me, what has happened in the past is of very less importance. Yeah, very few information I carry forward from the past, but at the same time, I give more weightage to what is happening right now in the markets. So if you're a scalper or an intraday trader, and you want to shift your views very frequently, then you need a tool which will tell you what is actually happening at a ground level, at a market, what the buyers and sellers are continuously keep on trying to achieve. Are they doing a good job? Are they doing a bad job? Because there are times market will be swinging back and forth multiple times in a day. Right? So those kind of places, there are many challenging situations market will throw to us. And Autoflow helps to solve all those puzzles, all those complex puzzles which are thrown by the markets. So delta, we had seen that, which is nothing but total number of buyers minus total number of sellers. We get the delta. Delta value can be positive. Positive means buyers are in control. Seller means, delta, if the value is negative, means sellers are actively in control. When I say buyers are in control, there are more buy market orders come into the system compared to the sell market orders. That means more buy market orders are in demand. If delta is negative, means more seller are in demand. And there is commitment of traders. You can also see here one more metric called commitment of traders. It's not enabled in this particular chart. Yeah, it is there. So if you could see that, commitment of trades talks about who is putting more effort, whether buyers are putting more effort or sellers are putting more effort. And it is also measured in terms of delta terms. So here buyers are putting more effort compared to the sellers in that particular bar. So who is putting more pressure? If you ask me, buyers are putting more pressure in the markets. So it's one other way, indirectly you can track the commitment of the participants. And as I said, it is measured in delta terms. Right, so that means what? 2068 delta is what required to push the price from low of the candle towards the close of the candle. Whereas 156 is the delta. Sellers are putting an effort, means sellers are not putting effort compared to the buyers. Buyers are putting almost 10 times plus effort. 10 to 12 times effort is what the buyers made in this candle. Whereas sellers' effort is very less towards the close. So it is itself measured, the commitment of trades itself measured as a metric in terms of delta from the low to the close. That is what a buyer commitment is all about. Seller commitment is measured from the high of the candle towards the close. All right. Ideally, it's a metric. It helps. It's a kind of an additional accessory kind of parameter. Again, once again, it helps traders to decide whether it's a successful breakout or a breakout failure. There are many places one can use COT to trade the breakout failures. COT means commitment of trades to trade the breakout failures. There are many places one can see whether successful momentum is happening when the breakout is happening, whether there is a successful momentum is happening or not. So one can use the COT levels to strategize based on that. So talking about Autoflow blocks, there are varieties of blocks are there. Bid and ask ladder, commitment of trades, CR, volume profile for the day. Volume profile for the day, obviously you can see it over here. So you can see the volume profile on the extreme left-hand side. This is a simple volume profile for the intraday alone. Today's running day, or whatever is the volume profile for that day, you will be able to see it on the extreme left-hand side. And then we have a table. So table, you can ask, you want only buyer volume, you can want only seller volume. You can totally see the ask volume and bid volume. Obviously, delta is what? Delta is nothing but the ask volume minus bid volume. Delta is nothing but what? Delta is the ask volume, total ask volume. So total ask volume for that particular candle, total ask volume minus total bid volume. Or nothing but total buyer volume minus total seller volume. As simple as that. All right, so there is a small promo over here. We are doing an TradeZilla 6.0, a 3 months of online program for the traders who want to learn the framework using market profile, Autoflow, and also trading systems. So closely, it comes around 160 plus hours of live and weekend learning. More of a live learning, I would say that. Weekend learnings will be teaching the basics, we'll be teaching the flow, how to understand market profile, how to understand order flow, and some of the strategies that we will be practicing. And most of the intraday strategies will be explained during live session itself. So what we'll be teaching in the TradeZilla 6.0 is like more of a systematic thinking for discretionary traders. So even though if you're a discretionary trader, how to look into the data, based on the data, how you can take a trading approach is what I'm going to explain in TradeZilla 6.0. It starts from 7th of May 2022 onwards. So the overall idea about the program is to make traders independent in taking their buy and sell trading decisions. The most important thing is make them understand about the markets better and help traders to prepare for their trade preparation, how to prepare for the week, what are the information they have to watch out, what information they have to watch from market profile, what does that means, and how to take live trading decision based on order flow information, and how to put this in a practice in a very systematic way with a proper risk management. Of course, When I say risk management, I talk about the execution of trades, how to take a controlled trades how to take a trades in a risk controlled environment is what we teach. And how to reduce emotional trading decisions, where we can spot emotional trades done by other traders and how we can convert into a trading edge and improve the trade execution is what we teach in TradeZilla 6.0. All I can guarantee you is an institutional grade technical analysis program, right? All I can guarantee you is like proper learning on market profile and order flow. Mostly may not be there. Most of them are not there in the textbooks, or most of them are not there in the YouTube videos. So anyways, let's get back to the topic here. So when it comes to order flow, we can classify the price action into three types. One is initiative drive, another one is absorption. Absorption or responsive price action. And then third one is consolidation. Let's try to understand initiative drive and absorption a little bit better, because these are very commonly understandable price patterns are the very, very fundamental price action patterns in order flow. So initiative drive always comes with strong volume flow. The volume flow will be strong. You'll be seeing many places, you'll be seeing big delta. When I say big delta, the size of the delta will be very big. For example, last Friday, we had seen that at the opening, we had seen big volumes back to back. Suddenly, two places, the big buyers started coming up. Two places, the big buyers started coming up. Kind of big players are coming and giving a commitment. We don't know how long they're going to hold. Nobody knows. So whether they will hold only from an intraday perspective, are they smart from an intraday perspective? We really don't know. How long they will hold, whether they are going to hold for only 1 day or 2 days or 5 days or 10 days or 1 month, that holding period, we don't know. But if you collectively see the order flow as a sequence, you can visualize those information. One cannot judge order flow only by looking into that particular bar alone. Right? So one have to learn to collectively see the information and how the price is, once the big commitment is happening, after that, how they are responding. How the traders are responding is what really matters. Not every commitment which is happening in the markets are smart money commitments. Smart money commitment happen at very few locations. Last Friday, what happened is not a smart money commitment. It is kind of a momentum commitments. So you'll be seeing a momentum trading will be happening in the markets. Momentum trading means price will be moving faster. There are many times you would have seen that big volume happens, but still price will be moving very slow. Now, such kind of price action is what we call as the absorption. Absorptions are generally big volume activities. So why it is called as absorption, I'll tell you, because every market order, opposite party is going to be a limit order. We know that. So here, even though actively big buyers are coming in, they are trying to move the markets. Market will not move because the opposite party also comes with big orders. They'll be putting big limit orders and they'll be waiting for the fill. Like there are various types of orders are there. Iceberg order is one among them. They might be placing an iceberg orders. So here, despite the aggressive activity is happening, price gets stopped, indicates that some absorption is happening. So some means some smart money or some institutional money is coming and playing around those levels. How I can spot using order flow? You can spot using order flow. There are many places you can see that in this trade location, if you could see, price action was keep on making. Price was attempting to go back up when the big volumes are happening around these levels. Big volumes are happening, but despite that, the buyers are failing to move up. Buyers showed interest, but despite buyers showing interest, market started falling down. Usually that happens because of some limit orders are there, some liquidity supplies around those levels, some pending orders are around those levels. So probably if you're a price action trader, you know what I'm trying to talk about over here. Because price action traders are the one who focus on absorption, pending orders, all such kind of stuff. But they cannot visualize it. Whereas in order flow, if you are a price action trader, definitely you can visualize the absorption. You can visually see that absorption is happening or not. And absorption is a passive way of controlling the price action. So who is controlling the price action here? Those who are putting the limit orders, they are getting smart over here. So if you are seeing absorption, that means you are seeing that despite market orders are coming into the system, they are trying to move the price. Ideally, absorption is happening. The passive limit order traders are attempting to control the markets. That is what you can learn from the absorption. All right. So that is with absorption. Initiative is more often traders, they come and roll in market orders. They keep on pushing the price up and up and up and up, or they keep on pushing the price down and down and down with huge volume. They come with a huge volume flow. Sometimes institutions come and play this game just to trigger momentum in the markets. Initiative drive brings momentum, whereas absorption brings kind of a range bound activity, or even trend reversals is what absorption mostly brings. So absorption mostly happens at a zone where the resistance or supports are more or less likely to be felt. Consolidation. So this generally we can see during middle of the day. Middle of the day, most of the price location, right? Volume will run dry. Many times you would have seen that. Many times you would have felt that. Market will be running dry, boring, dull, boring. Price will be rotating around the VWAP. Price will be keep on going back and forth around the VWAP, frustrating the traders. Sideways consolidation price action. Lackluster volume flow and lower delta trading. No conviction in the trades at all. So something else will be happening. Somebody will be keep on, for namesake trading is what will be happening in the markets. That's what a consolidation is all about, right? No aggressive participation, neither from the institutions or neither from the any kind of traders. So very less participation, very less liquidity supply. That is what it results in consolidation. Typically, not much of a big volume will be transformed. Not much of big commitments will be happening. Very moderate, thin volume activity is what mostly happens. So what are the different modes of order flow? If you ask me, there are a lot of modes are there. Typically, I prefer using bid and ask imbalance mode. I'll also show you all type of mode also. If you go to order flow, here is my order flow charts. I can go and use the bid and ask. I can go and use the bid and ask histogram. Bid and ask imbalance is what I prefer using it. You can see that the one which is shaded in green color, they're nothing but water. I try to compare diagonally. Wherever the volume activity is more than 10 times, I prefer taking those volumes. So those will be considered as, whichever the volume is comparatively more than 10 times bigger, those volumes are used as a momentum volume. So those are the places you can understand, visualize that where the momentum is actually happening in the markets. How to learn from the scratch. In fact, we are teaching right from the scratch only. Professor Verma, what is the capital needed for this 3-month program apart from fees? See, we are going to teach how to use Autoflow. Of course, we don't talk about trading capital over here. I would say like anything than, if you're going to trade options, maybe a minimum 2 to 3 lakhs would be an ideal capital. But it depends upon the trader. Some traders, they like to trade with only 10, 20 lakhs of capital. Some traders, they would like to talk about only 5 lakhs of capital. So what you can expect here is a pure learning from the course is what you can learn. As I said, we don't guarantee any profits. We neither guarantee losses also. So I can tell you, like, you can learn a pure skill about how to read the order flow charts properly, that too in a live environment, and how to take decisions, how to take better trading decisions, where people take wrong decisions, where one should avoid, where one can take an efficient usage of order flow, like where order flows are powerful, which information is powerful, which information is less sensitive, which information is more sensitive. That is the kind of discussion you can expect in our sessions. Will bookmap changes the way we trade? I don't know. Probably I think they are launching in India. Hopefully there could be a chances are there. Raja Mani saying delta position is only seen in first minute. Of course not. Delta will be watching continuously. Delta will be watching. Cumulative delta will be watching. There's one another parameter is called cumulative delta. Maybe I'll do one thing. I'll try to remove the bid and ask section, because I do keep in my table, I keep only delta, cumulative delta and volume. This is the 3 primary metric I'll be keep on throughout the day. The cumulative delta talks about the delta for that particular day. Delta talks about only for that particular candle. So delta talks about, so if you ask me what's the difference between delta and cumulative delta, delta talks only about the at a bar level. At bar level only, it talks about whether buyers are controlling or sellers are controlling. Buyers or sellers are in control. Sellers are in control at bar level. When I say bar, I'm talking about candlesticks. All right. So it's Saturday night, so I'm just giving an at bar level, right? And then there is also cumulative delta. It talks about at a particular day level. So here also it's going to talk about whether buyers are in control or sellers are in control, but it talks about at a day level. Means if today delta is maintaining positive, that means overall this today's data, more buyers are controlling the day than the sellers are trying to control the day. So the light green color indicates that probably the volume activity on the buy side is more. That's what it indicates more. All right. So I guess with this, I would like to stop the session here. In the next week, we will try to come up with a very interesting topic, particularly on more detailed aspect of market profile. So if you are really a market profile beginner and you want to learn more about market profile, definitely you can consider attending the next week program, which will be shortly notified in our webinars platform, right? So one recommendation here. So always try to use Chrome browser if you are attending from the webinars application, because Chrome is the ideal browser for using webinars application for better audio and video quality. All right, so let me stop here and I say thank you for coming by, and hope you learned something very basic about Autoflow. Maybe in the upcoming sessions, we'll try to talk about more detailed concepts. See you in the next week. Thank you. Bye-bye.